India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a festive time, and as you can see, all of us are in festive attire. We are coming to you this morning, as always, from our studios here in Mumbai. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Nigel, I think we know who the winner is today, right? Look at Prashant, resplendent in that festive mustard yellow. But yeah, I think it's just a good vibe, good feelings, and it is finally Diwali.
Well, that's right, and the markets as well seem to be coming to terms with it. Last couple of days have been good, so we're feeling more festive this week in comparison to the end of last week. So good times.
I think the market is also supporting
Finally.
By the way, I just wear what they give me. So, anyway, let's just quickly. That's a beautiful looking set, and it's just looking lovely, absolutely stunning. Well, let's just quickly run you through what you need to know as you begin and we start another fresh new trading session. I think it's looking good. Not just in the US, it's looked good in the US for a while, but even here in India, where the market actually has seen a correction and now it's drifting higher. So last night, Nasdaq hit a fresh all-time high. We ended about 0.75% up. The S&P 500 lesser so, about 0.16 or so. Now, you had alphabet numbers which came through, and I think the numbers came towards the second half of the session. Actually, if anything, the Nasdaq came off a little bit after the alphabet numbers came. I think Alphabet, the Google stock, post hours, post New York closes actually higher. There was a conference call with analysts, etc., and we'll put out more details there. Some of this is making headlines in terms of what was said, not just specifically company-specific, alphabet-specific, but also AI adoption, etc. at Google. Now, macro data in the US was mixed. So you've got strong consumer confidence numbers which came through, but you've got job openings, the private job openings, which came through at the lowest level since early 2021. Remember, Friday, 2 days from now, we get the jobs data. The monthly jobs number, which I think is one of the most important things to assess labor market strength or weakness. The 10-year was down about 3 basis points, 4.25, and I was saying this yesterday. If you look at yields, you look at dollar, you look at equities, all are in a way pricing, or rather not pricing, but priming for a Trump win. But as you go closer and closer into the voting day, the 5th of November, that basically people would want to take some of those bets off and maybe not go completely full up, because if you look at polls, etc., polling data, etc., it just still looks like it's, the race is in an absolute dead heat, split right between for Harris and Trump. Now, some of the data points, you've got oil prices, which are unchanged. 71.45 is where we left off as of yesterday. We get numbers from Meta. So, this is the week where we have 5 out of 7 magnificent 7 companies reporting, and Meta reports earnings tomorrow, post New York close. All right, let's just circle back to levels here for the market. So, we had a decent close, 0.5% plus on the Nifty, 2% on the Nifty Bank, 1% each on the mid-cap and the small-cap indices. So for the Nifty now, the resistance comes in at 24,567. It's the recent swing low, basically. Minor, but it's important, about exactly 100 points away from where we left off yesterday. Then you got the 20-day moving average, which comes in at 24,832. And that's really the big one. The Nifty Bank, by the way, has already crossed that. Supports come in at 24,150, which is nothing but the low that we saw over the last 2 days, approximately the low that we saw over the last 2 days. So this is the broad setup. Bank Nifty is next. We closed decisively above the 20-day moving average and the 40-day exponential moving average with that 2% higher close. And here, we got to get above the 61.8% retracement of the entire fall from the all-time high to the recent low, which stands at 52,835. And on the way down, the Nifty Bank support stands at 51,157. So that's the broad setup. As I've been saying, if you're trading, you need to be really nimble because you've got large, very large events lined up over the next 10 days or so. Jobs data this week, of course, earnings before that, all the way with US elections, Fed decision on the 7th of November, etc., etc. So it's a big one, the next fortnight or so. GIFT Nifty will come up on your screen, give you a sense of how we are likely to start. Is around about 30-35 points or so. Survi.
Well, absolutely. So the thing is that we've got a positive handover from Wall Street, but Asia is not picking it up entirely. The color is a mix of red and green across Asia this morning. Some of the mainland China and the Hong Kong markets, they're a little weak, but the Nikkei is continuing the good form. However, I'd say that the Diwali mood is setting in, and I think in the gold markets, the Diwali mood set in several months ago. It's astounding, the move now. If you're looking at the December contract, the near-month contract on COMEX, that price is almost touching $3,000. And sometimes it makes me wonder, because this is the fastest pace of rise that we've seen on gold in the last, many, many years. I think in the last 2 decades for sure. Just the sheer speed at which gold prices have gone up, 30% up this 1 month. So I don't know, is the gold market telling us something little uncanny? Kind of gets me a little worried at the margin, but anyway, for now.
I mean, the gold market, the basic idea is that Trump will, those estimates, right? $7.5 trillion of fiscal expansion over the next 10 years.
Extremely expansionary
That is
policies.
inflationary. And gold is the best hedge against inflation. So at the margin, incrementally, that also is kind of pointing to.
Is leading to this, the latest move, which is taking the price almost to $3,000 to the ounce. I mean, it's clearly linked to a lot of politics in the US. And of course, you have enough to deal with on geopolitics. Anyway, that's on gold. Coming back home, over to our neighborhood. By the way, in the US as well, of course, Prashant mentioned Alphabet. The other one was AMD, and that was a sharp reaction on the way down and after hours, 8% down because of the guidance, which the market didn't quite like. Tomorrow, we'll get the first print of the third quarter US GDP. The estimates are running at around 3.1%. So that's going to be an important data point to keep in mind as well. And speaking of macros, tomorrow is also BOJ Day. Thursday is when the Bank of Japan will meet, and it's the first time after the election result. In Japan threw up a far more mixed picture with the ruling party losing its majority. So that's going to be an interesting meeting to watch as well. Now let's talk about India, and why I say it is beginning to feel a little like Diwali, because yesterday, of course, we had the second day of a follow-up with green continuing on the screen. And then if you look at the earnings post-market hours, a fair amount of cheer there. It's more good than bad. So just to give you some examples, Voltas has been in line, Marico has been in line. Marico is talking 5% volume growth and pretty steady demand, and very good demand on the rural side, twice as much as urban demand. So that sounds good. On Voltas, the numbers are more or less in step. There is margin expansion year on year as well. Hitachi is a very, very bright spark. A lot of institutional investors own Hitachi, and it's a stock that's always seen very, very expensive, but the execution, the numbers are adding up. So that's the good news. The profit has doubled. The margin has expanded 170 basis points. All those who hold Hitachi will be very happy to see that the earnings are delivering in step with the stock price as well. Keynes has been a blowout number. No problems there. It's along expected lines. Revenue is up 58 to 60%. PAT is up 86%. And margins have improved as well. The niggling issue continues to be around, lenders and BFSI companies, those asset quality concerns. They'll come back in when we talk about SBI Card, because the gross NPA ratio has increased, the credit cost has increased. So we need to watch out for this. But as I'm saying, it is Diwali mood and Diwali feeling, and that's showing up in the FPI numbers as well. Because after a long, long time, the FII number is not in 4 digits. The sell number is just about a 550 crore net sell, and that was offset quite nicely by the domestic institutional buying. So overall, looking quite good. Nigel, over to you.
Well, the Nifty Bank, that's going to be the key constituent to look at. And on Monday as well, we made this point that though there was doom and gloom, but bulk of the Nifty Bank is performing, and that's what could lead the Nifty Bank higher. And that's actually played out. Now, the question is, can the Nifty follow suit and follow what the Nifty Bank has done? Well, yesterday it went ahead and broke those technical levels. So that's going to be a key point to look at. In fact, if you look at the Nifty Bank, and you pull up a chart that comes up for you on the screen, yesterday it conquered the 20, the 50, as well as the 100 DMA. So clearly it was a very, very good trading session. And in a matter of 2 sessions, they've taken out all these 3 levels. So that's good news out there. What's helping? The FIs, double engine firing out here. They were selling 15,000 crores on October 3rd. That came down to 5,000 crores, which is now down to around 550 crores. Point number one. Point number two, what about the F&O market? Well, out there, we're seeing a short squeeze. So from around 1.7 lakh contracts on the short side, that's come down to around 91,000 contracts on the short side. Tells you the power of short covering as well. Massive one is what we're seeing out there. So that's played out in favor of the bulls. Options data comes up for you on the screen. Well, yesterday you saw the 24,500 call that was earlier seeing writing. These bears, they were packing their bags. They were saying maybe this market has got too much momentum. And that action has shifted to around the 24,700 odd mark. On the downside, though, there were some mixed signs at around the 24,400 odd mark. So that's the important mark. You don't want to see unwinding on this strike, which takes us to the levels. I've been making this point. We're in a broad 600-point range, which comes up for you on the screen. We're closer to the upper end of the range, but you'll want to get past, that 24,550 mark. Then look at the 100, then look at the 20 DMA. So those are the important marks. If you're looking at resistance, that's the way it flows. The Nifty Bank as well, good session yesterday. It broke that 51,500 mark. That was a resistance mark, which now becomes the important support zone. It has the 20 and the 100 DMA around those levels. So the Nifty Bank plays out the weekly expiry. Will the Nifty catch up with what the Nifty Bank has done? Let's break those crucial technical levels. Today is the session.
All right, Nigel, thank you very much for that. So that's essentially the setup as we start this morning.